OPEC, a powerful alliance of oil-producing nations, has announced plans to reduce daily oil production by 2 million barrels beginning in November. This is unfortunate, because despite being the world's top oil producer, the US still uses more oil than it produces. Out of the 100 million barrels of oil used daily by the world, the United States produces about 18.8 million barrels daily, but it also consumes about 20.5 million, leaving a daily deficit of about 1.7 million barrels. Since the US must import and purchase its oil on the open market, it is greatly impacted by crude oil prices, which also have an impact on the US government, and of course, factors like consumer sentiment. The fact that OPEC is lowering production costs is what's causing the sharp increase in oil prices. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. Over a century ago, the energy crisis became a recognized phenomenon. Since the world began to rely heavily on oil in 1846, the history of oil dates all the way back to that time. Oil supply and demand are merely illusions, and here's why. Since the world's need for oil is what economists refer to as inelastic, meaning that it doesn't really change over time, the real way to control the price of oil is not through supply, but rather through supply management, which is typically price stability. Spare production capacity, a measurement of how quickly an oil producer can ramp up or slow down excess oil production in 30 days, is also a way to achieve price stability. Because the country with the ability to produce more than it requires is the one that gets to control and stabilize the price. Saudi Arabia is one of the nations with this power, because it has the capacity to produce more than 2 additional barrels per day than it requires. How can they do that but the US cannot, is the question. That's because their oil is nationalized, which means that their governments get to produce it and profit from selling it, without being in competition with each other, since they lack a free market. Because private companies produce and profit from the oil in the United States, the industry referred to as being privatized. As a result, shareholders would never consent to spending more money today to accumulate excess inventory in an effort to depress prices in the future. Even though the US is the #1 producing country in the world, when it comes to oil, it can't stabilize the price with the exception of using SPR, or Strategic Public Relations. Organization of Petroleum Exporting Countries, or OPEC, was founded in 1961, when 5 significant oil-producing nations, Iraq, Iran, Kuwait, Venezuela, and Saudi Arabia, came together. As time passed, they continued to add nations to this list, in an effort to stabilize world oil prices. When Richard Nixon removed the US dollar from the gold standard in 1971, gold's price skyrocketed while the US dollar's value plummeted. And because of their oil was set in dollars, OPEC's governments relied heavily on the petrodollar's value. This undoubtedly infuriated OPEC, which is why on October 19, 1973, it imposed an oil embargo on the United States, effectively stopping the US from receiving oil. The price of oil doubled in less than a month after the embargo took effect. Inflation skyrocketed, people began to lose their jobs, and the US entered a deep recession. Even though the oil embargo had been lifted by 1974, the price of oil in the United States wouldn't actually start declining for another 10 years or so. In December 1975, the United States established the Strategic Petroleum Reserves, or SPR, which were meant to provide the country with access to roughly 90 days worth of oil in the event of an emergency or another oil embargo. Keep in mind that one way to control oil prices is to have an excess supply. Since roughly 1984, the SPR has never had less than 450 million barrels of oil, and it was only recently that we fell below that level for the first time in 40 years. This is why the SPR is so crucial today, and the reason for that is that in addition to the 10 million barrels he recently requested, the president announced on March 31st of this year a plan to release 1 million barrels of oil per day for the following 6 months. Although this is highly contentious, that is how we arrived here. Here is the discussion on why this is happening. It is important to note that SPR is not the real cause of the increase in oil prices. OPEC joined forces with 10 other oil-producing nations, led by Russia, to strategically reduce daily production of 2 million barrels of oil. The United States was obviously very upset by this, as evidenced by the fact that it is now charging those nations with conspiring to manipulate prices, taint elections, and of course, aid Russia. One of the OPEC's top producers, Saudi Arabia, basically responded by saying, "This is not about you. We're not trying to team up with anyone. We're just trying to get ahead of these interest rates increases that will hurt the global economy and set it into a recession. The US should construct more refineries if they want cheaper oil. The No Oil Producing and Exporting Cartels Act, which would allow Congress to sue OPEC for attempting to monopolize oil prices, is another reason why you may have heard of it. Now, they intend to accomplish this by amending the Sherman Antitrust Act of 1890, which was previously applied to dismantle John Rockefeller's oil monopoly. The bill is backed by both sides, but its detractors, who are mainly oil and energy companies, argue that it runs the risk of upsetting OPEC even more, which could destabilize prices and drive up the price of oil. However, those who reject that claim contend that you are only making that claim because you oppose the existence of oil in a free market, because doing so would result in lower prices and a reduction in your ability to profit. What impact does this have on our portfolio? Here are a few noteworthy facts. As energy stocks have been the real winners this year, as a result of higher commodity prices like those for oil, ExxonMobil, for instance, has been crushing the stock market, rising nearly 60% year to date. According to historical data, there has not been much of a relationship between gas prices and the stock market in the global economy. Because, as you may recall, the Federal Reserve frequently bases its interest determinations on the Consumer Price Index, which measures inflation. Additionally, as gas prices rise, the CPI rises, which results in higher inflation, which in turn raises interest rates to combat inflation. When that occurs, the cost of mortgages and borrowing money increases, leaving consumers with less money to invest. The FED has more justification to raise rates at their next meeting on the 2nd of November, because higher gas prices translate into higher inflation for a longer period of time. In a healthy economy with inflation at 2%, this kind of correlation between oil prices and the stock market is not typically expected to exist. But for the time being, that's the cause. There is now a second factor contributing to the stock market's decline, and that factor is the jobs report. Recently, the economy added 236,000 jobs, which is normally considered a positive development. However, at the moment, the stock market views this as a negative development because it gives the FED more justification to raise interest rates because it believes the economy is running too hot and needs to be slowed down by doing so, which clearly hurts everyone. The Democrats are accused by the Republicans of using limited oil reserves as a virtue signal to keep oil prices low and win re-election. Why would the administration use the reserves at all if they were so concerned with sustainability and going green? Oil is a commodity that stands for both energy and control. That has historically belonged in the hands of strong corporations that have used this resource to buy the political process and the votes required to keep themselves in power. Those who have energy have control, and those who have money have power and control. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.